Q2 2025 confirms the trajectory of accelerated growth and increased operational efficiency. CEO Zach Bradford opened the company's financial report with an optimistic note, highlighting a robust revenue growth of 12% compared to the previous quarter and an impressive advance of 62.5% compared to the same period last year, totaling $181.7 million. Gross profit followed the same upward trend, recording a sequential increase of 5% and reaching nearly $100 million, with a healthy gross margin of 53%. However, the company reported a net loss, directly attributed to the decrease in the spot price of Bitcoin, and not to operational deficiencies. During the reported period, CleanSparks mined 1,957 Bitcoin, and the average revenue per coin increased by nearly 69% from the previous year, reaching $92,811. In contrast, the marginal cost of production per Bitcoin increased, reaching an average of $42,600, influenced by higher energy costs and increasing network difficulties. As of April 30th, the company's Bitcoin reserves exceeded 12,000 units, reflecting a prudent and balanced treasury policy that combines selective liquidation with strategic accumulation. CleanSparks firmly reaffirms its commitment to avoiding shareholder dilution, instead relying on generating cash flows from operations and a $200 million credit line available through Coinbase. CFO Gary Vecchiarelli provided a clear perspective on the company's adjusted performance, stating that adjusted EBITDA, excluding unrealized losses, was around $70 million, equivalent to a net margin of 39%. Strategic perspectives and future initiatives. Management has reaffirmed its ambitious plan to reach a total capacity of 50 EHS by mid-2025, an objective supported by ongoing projects in Wyoming and Tennessee. Additionally, CleanSparks is exploring the possibility of further expansion up to 65 EHS, but within a rigorous and disciplined investment framework. A notable aspect of the company's strategy is the abandonment of short-term guidance in favor of decisions anchored in investment return analysis, offering flexibility in capturing market opportunities that arise. Bradford emphasized that the financing strategy remains conservative, focused on maintaining financial discipline and avoiding dilutive issuances. Detailed financial and operational data. In Q2 of fiscal year 2025, the company's revenues reached $181.7 million, a 12% increase from the previous quarter, in the context of an optimized operational environment and continuous fleet modernization. The gross margin remained steady at 53%, underscoring rigorous cost control. The net loss of $138.8 million was the result of revaluing Bitcoin assets to market price, an accounting adjustment with no direct impact on operational cash flows. In adjusted terms, EBITDA was $70 million. The average energy cost was 6 cents per kilowatt-hour, and management indicated that the priority is maintaining margins, not achieving a fixed cost threshold. Fleet efficiency has improved significantly, reaching below 17 joules/th by the end of April, compared to 18 joules/th in December 2024. Questions from analysts and executive responses during the Q&A session. Mike Colonies, H.C. Wainwright, requested clarifications on market share, in the context where rivals are pivoting towards AI and HPC. Bradford stated that CleanSparks controls approximately 5% of the global market and intends to increase its footprint, leveraging the advantages of its already developed infrastructure. Greg Lewis, BTIG, addressed the dynamics of the equipment market and acquisition costs. The CEO specified that the decrease in demand has allowed CleanSpark to obtain significant discounts, including a 15% discount on minor acquisitions. Brian Dobson, Clear Street, asked about potential share repurchase programs. Vecchiarelli responded that all options are under evaluation, but currently, the company prefers to reinvest in growth and consolidate its Bitcoin reserves. Sentiment analysis and strategic positioning. The overall tone of the analysts was positive but balanced, with an emphasis on operational efficiency and a strategy oriented towards sustainable growth. Identified risks included the volatility of the Bitcoin market and pressure on energy costs, aspects that management is addressing through geographical diversification and anticipatory planning. Comparison to the previous quarter. Sequentially, revenues increased by $19.4 million, plus 12%, and gross profit advanced by $4.3 million. The technological progress of the fleet is clear, with a jump from 18 to below 17 joules (TH) in just 4 months. While in Q1 analysts were focused on achieving the 50 EH/s target, in Q2 the emphasis shifted to competitiveness and capital allocation strategies. Risks and mitigation measures. Among the major challenges, the company identified escalating energy prices and Bitcoin volatility. In response, CleanSpark has consolidated its operational network across 4 states and secured essential equipment in advance to avoid logistical bottlenecks. Conclusion. The second quarter of 2025 has once again validated CleanSpark's business model, with accelerated revenue growth, improved efficiency, and a coherent financial strategy centered on sustainability and value for shareholders. The company appears well positioned to achieve its 50 EH/s objective and establish itself as a dominant player in the global Bitcoin mining industry.